All right, everybody, welcome back into Mining Stock Daily. We're going to take a casual Monday cruise through the markets. Last week, volatility abound on the back of geopolitics and conflict in the Middle East, and obviously rising energy prices having a huge gut wrench to markets. And so we reached out to Frank Cappelleri once again of Capp Thesis, who's going to help break us down visually what the markets are doing and how he is seeing things. Once again, if you are listening to this on the podcast, Frank's going to share a number of charts. We will publish this conversation on our YouTube channel as well, so you can take a look at what Frank is talking about as well. But first of all, Frank, it's good to have you back. First time in 2026 you've been on the pod, and we have approached a little bit of volatility, I guess you could say.
Yes, sir, Trevor. Thanks a lot for having me. Appreciate that. And yeah, things have really changed in the last few weeks, and we know the reasons why geopolitically, but the way I look at the market too, you kind of sensed a little bit of a change of character as things were progressing really as early as late October of last year. That's when you really saw that last peak of the large cap growth stocks leading. If you remember, that was the end of earnings season, and a handful of the Mag 7, I think there was 3 in one day, all responded well, all gapped up, had about a day and a half of follow through. And that's really has been the underperformance since then. Now, up to that point, for the next, through the end of the year into early January, there was historically strong rotation, like just really strong, to the point where almost every other non-growth sector was doing well enough where the S&P 500's advanced decline line was making new all-time highs over and over again. So that was enough to pull the S&P to S&P 7,000, but not quite enough to pull it through. So at the end of the day, you need the most influential stocks doing well, and we just haven't gotten the bid for them. And now with everything happening overseas, it just looks like a mess right now.
Yeah.
So
at the beginning of the year, Frank, we were talking a lot about the rotation trade out of tech stocks into resource equities, into natural resource commodities. That was a big thing. But obviously what happened in the Middle East has really caused a lot of concern regarding energy prices and really what happens when oil barrels hit triple digits. And there's a little bit of concern here, although this is still fresh and we're only a couple weeks into this thing. Who knows what the rest of spring has entailed? But can you talk to us? You've seen a few of these markets before. What is smart money's concern when barrels of oil hit triple digits?
Well, I hate to use the term uncertainty because that's thrown around too much, but I think the way it's gone right now, from day to day, you can't really trust, number one, the headlines, whatever they are, and then what the market reaction is going to be. Because you've seen some strong moves in either direction, but none of them have really held. Now, even before that, though, there was concern of, of course, AI, but with really the software stocks rolling over aggressively out of nowhere. And that was strange as well because it was almost happening in a vacuum. So then so that's still going on. And then you throw, again, triple digits, crude oil into the mix. And obviously, as you well know, it has not had, nothing's been immune to it, including precious metals. So that's what's, I know other people are talking about it. What is, precious metals has, I'm appreciative to acquire here, has its own uses, but at the same time, it's become a momentum trade as well. So there's like the question is, does that get pulled under because of that? You have a lot more eyes on that space now, right? A lot of trend following strategies, a lot of momentum, traders that really hadn't looked at gold and silver from that perspective. So that's also put a wrench in the view of the global market landscape as well.
I think a lot of smart people, who had finally some time over the weekend to digest last week's move, started putting out some of their thoughts and analysis here. I've been reading here, on Monday here, Frank, and some of the general themes that I've been trying to understand is maybe the real selling hasn't necessarily begun. What we were seeing in the last couple of weeks is maybe more hedging when you can, if some parts, despite how expensive some of those hedges have become. There's also a continued concern of private credit that was going on before Strait of Hormuz conflict, and then obviously credit spreads as well continue to be a topic of discussion. But there continues to be, we're our head is on a swivel. It's not just Hormuz, it's not just private credit. I mean, there's a number of different angles where we're kind of taking it on the chin right now. We're just kind of wondering where that next left hook is going to come from. Um, I know you're a technical guy, and I continue to talk to you. But what about the fundamentals here, Frank?
Yeah, well,
Have you breaking that down?
can't ignore them. And in reality, the technicals are in reaction to the interpretation of what the fundamentals are, right? And so you can't ignore that part of it. So when you're in an uptrend, when it's in a consistent comeback from just tariffs, right? Then maybe some good news on inflation over the, going back to last year at least. And now a lot of that's off the table. You're coming into obviously a Fed meeting this week with, the administration obviously wanting lower rates, but with so many other inflationary pressures from different commodities across the board now, you throw in Iran, it's like, what exactly are we going for? Or, there's a lot of moving parts and not many of them are pointing upward right now, except maybe the dollar right, and commodities.
Okay. Well, maybe let's look at what those fundamentals are saying to us on your charts here. And I want to start with the S&P, just because I think that tells a big, broad story right now. We will dive in to precious metals and a few other interesting charts as well. But do you want to start by sharing the S&P?
Yes, sir. 1 second here. So I wanted to go back to first, just to give you the setup, what it looks like technically, where, as we were talking about, this was our last gasp here of large cap tech leading. And so when that pulled back, what he wanted to see was some healthy consolidation from that point. And really that's what would have been the best case scenario, considering that we had an extremely strong, consistent rally from the April 2025 lows. And so as a result, this is what the S&P 500 looked like right at the end of the year here. This is captured from December 30th. And this was the first time we had put this bullish pattern. This is the inverse head and shoulders pattern for people who can't see the picture, but an upside target of 7,240. So pretty substantial target. And again, that's always born from some previous volatility. And so had that triggered on December 23rd, had about a week's worth of follow through. But as we got in 2026, of course, that wasn't the case. And this is what it looked like all the way through. And so we color coded this range after about a week or so because we realized that it really wasn't working out. And we wanted to get a sense of how much time the S&P was spending near that breakout zone, near 68, 75, below it and above it. So again, we got a few tests of around 7,000 failed. And as things progressed from late January to February, of course, it was the buying efforts, they were still there, but they produced fewer rallies that got, back to 7,000. So eventually, even before this rolled over, we just called this a failed pattern. And most of the time you see a failed pattern is right below the breakout zone, maybe a key support area. But this is really one that wore out its welcome. Still wasn't more than say 1 or 2% away from this breakout area, but you can't really call this a good attempt of a follow through when it just does nothing. And so eventually just shows that buyers kind of lost interest in holding. Obviously the news became worse as well, but I always find that the price action gives you an idea of possibly what's to come. My first boss, Alan Shaw, may rest in peace, would always say, in price, there is knowledge. So sometimes you don't know what's going on, but the price action tells you that something maybe has changed. And so that gave way to now what looks like a rounding top, right? And so again, this isn't really a classical head and shoulders pattern because you can't really detect that. But what we can see is higher highs turned into lower highs and lower lows, and eventually that gave way. Now, this 65, 75 target isn't too far away. Started the day just about 80 basis points away from it. But the point is that we haven't had a successful bearish pattern. I mean, we haven't had a downside target hit in quite some time. This is what that looks like. This is that rounding top. This is a picture of all the price action going back to late April of last year. And all along the way, yes, the S&P was moving up consistently, but each one of these pauses could have been a potential topping pattern. But every time the market or the S&P started to roll over, that's when buyers stepped in once more. And as you can tell, only once or twice before this did we even go below the support level. So I think as of right now, we're down about 5 or 6% from the top here. Again, not a lot considering that top was late January. It's talking about it took over a month to get to that point, but it obviously looks ominous. So again, from a just percentage basis, it's very similar to what happened in November, down 6%. This is a double top breakdown, caught the bid. It's now still waiting for that. S&P's today trying to hold another 1% gain. Just hasn't happened. We've had 4 1% losses over the last, say, 4 straight weeks, one per week, without any 1% gains. Now we know there were a few intraday efforts, very big, including last Monday, but that's the problem. We've seen a lot of buying intraday, and it just
Yeah.
like it is wiped out by the time the next day begins. So we need to see some more follow through. I think at the very least for that to occur.
Yeah. Yeah. Absolutely. All right, you want to just chat about energy here. Obviously, this has been a huge topic here the last couple of weeks. What do you see in here in the XLE?
Yeah, so obviously on fire, right? And this is just two charts to frame this. And so, we can look at the RSI readings. There's a classical momentum indicator from both a daily and weekly perspective, and overbought is 70, right? And so this has produced a reading of 81 through last week. And as we can tell, XLE doesn't have, of course, the history that crude oil does, but it is pretty old. I mean, it started in 1999 here. So going back that many years, there's only 2 other times when the RSI hit that level and kind of stayed there for a week or two. The first one was in early 2005. As we can tell, that was in the middle of an extremely strong move, right, from '02 to right at the end of 2007. So this told us that it wasn't the end. It was obviously due for a pause. You can't sustain that type of stretch in nature, but all it did was help XLE regroup and went back up.
Yeah.
Different story in 2011, marked the top. So I think another way to look at this is if we frame this entire run here over the last 12 weeks, which puts XLE up about 31% through last week. And what's interesting about that is, again, this hadn't happened since 2022, but in the times that it did, the only other time, again, during that same or after that period of '09, is that it was like almost kick-started the move, right? This was after the great financial crisis, rally back. There was a pullback over the next, say, few weeks to months, but it didn't wreck anything. That produced
Yeah.
a higher low, and then another big run for XLE through, again, 2014. Most recently, big pop after the COVID lows. Again, not a small move over the next few weeks, but again, another higher low, and then set the stage for more rallying again up until the top or the relative top here in 2022. So I showed this because, again, we all have recency bias. Even though 2022 wasn't too long ago, a lot of people just remember XLE just moving sideways for the last, say, 4 or 5 years. But this shows that when you get a big move seemingly out of nowhere, regardless of the news, again, it probably doesn't happen in a vacuum, everything collapses. If we go by what's happened over the last 20, 30 years. So do I expect this, pace of 12 weeks to 30% clip to continue? No, but I do expect the next time that it does pause, that it can continue higher. Now, again, is this predicated on crude oil continuing to do what it does? Possibly. Or it could just be a time for commodities as a whole, to have some outperformance. So that's why I'm looking at it as, if I put blinders on and remove the news, which of course is hard to do, but if I did that, this just looks like a 4-year base that's finally given way.
Okay. Very interesting. All right. That is definitely, that's an interesting chart. In fact, so I started wait for a little bit of a pullback and then see what happens there, because historically that's what's happened when that RSI gets into real big overbought territory. Let's talk about precious metals here. A lot of us precious metal bugs here, Frank, are wondering what happens. We watch the day to day, and they could go either way. But do you want to start with silver here?
Yeah, so I look at the ETFs just because they're tradable for most of my clients. So for the
Mm-hmm.
SLV, I wanted to show a few different charts here. Number one, the biggest thing is when you have an historic, obviously parabolic advance and an historic crash right after that, you need to see some sort of normal type of trading come back. And that's really what's happened so far. And it's very easy to look at the last time it occurred, right? In October, November, which is, this is a log scale just to keep everything, in perspective here. And it happened perfectly. Trevor, as you remember from October to November, found support, higher low, one of the cleanest breakouts you've ever see here on silver,
Yeah.
through a cup and handle pattern, and then just continued, as you know, all the way up for the next few months. And so something similar occurred or is trying to occur now, much more volatile, more gaps. And so what it needs to do once more is to form another higher low to potentially complete this pattern. Now, it's obviously more difficult with the new stream here, but that's still going to be the goal. Now, the issue is because it's failing to do so far, we can look at this a different way. And this looks like a topping pattern as well. So what we're showing here is the price action from late December through now, where the most recent advance from, say, the low 60s to 85 in the SLV produced what's could be called a lower high instead. So we're showing two potential bearish patterns here, right? One
Mm-hmm.
much bigger in black, with the entire last few weeks being one big lower high. And we can also zoom in and look at, the maybe double top pattern just over the last few weeks. So again, it could go either way. We can say that all the time, but at the same point, we can see how this is shaping up because there's patterns being built on both sides of this. And whatever side momentum really comes to is probably going to get, leveraged one of those ways. But for now, we see a big trading range in play. And
Mm-hmm.
so looking at this way zoomed out, this is what we showed our clients just as SLV was crashing after the parabolic move, was how, large the move was. So about 580% from the July or from the summer 2022 lows until the January high, showing that it had gotten way extended, clearly, extremely overbought, almost 90, right, on the weekly RSI. We just talked about XLE 81. This got to 90. And also, it extended way above any of its moving averages. And these are weekly moving averages, right? So these go much slower. So at some point, this at least would have to be tested again. And so I
Yeah.
think it's gonna be a big test now. How SLV deals with these moving averages. Because if you go back to 2011, right, when the SLV topped, very similar, right? Parabolic advance, two of them actually. Second one, just like we just saw, was the top. In hindsight, we know that to be true. But look what happened, right? All those moving averages, again, going straight up, just like they were or have been now, finally got undercut. And the important part was when the ensuing rally, again, produced that lower high. And then all those moving averages rolled over. And more importantly, they started acting as resistance. See that by the red arrows here.
Yep.
Now, again, this is over a number of years. But if we see a change of momentum, is going to be result into something similar, right? So this is what I have to look out
Right.
for. I would say over the next 6 months, really, by the time we really get a sense of what the next phase in silver is going to be.
Yeah, it was just a long grind lower
Yeah.
for 6 years. I mean, it really took people out of the game, really, and I think most of this silver trade was just amongst the silver traders. You know?
Is it almost like a Bitcoin now? We'll get to that in a second.
Oh
Like,
yeah, yeah,
right?
absolutely. What about the gold miners? They had a nice run, obviously, for the last 18 months, and then kind of a little bit of a pause territory now.
Yeah, we're going to those right now. So the gold miners, yes, similar. So we have one chart for this, but it tells a story. And it's similar, as you can imagine, Trevor, to silver or silver miners for that matter, where again led much of the way, now having some trouble. So again, we can look at the last few. Now, this was interesting too, because gold miners actually made a new high versus the January high, right? Gold
Mhm.
didn't, silver didn't, but gold miners did. But obviously, ended up looking like now potentially a blow off top. So now it's come back down. This could be a potentially big top, double top here, connecting the last few weeks going back to the beginning of the year. But again, we go back to what happened from September to November. This to me looked like a classic bearish head and shoulders pattern as well, coming off of a very overbought condition. And just as it went below that day moving average, that's when bids came back in. And so it's a very similar scenario now, even though this pattern looks much bigger and obviously it's taking place at a much higher price level. But we just have to be concerned that looking at this again from a zoomed in point of view over the last few months doesn't tell us that this is all happening within a long-term uptrend, and this could be just a pause within it. And really, that can be the case across precious metal complex and across many risky assets for that matter.
Mhm.
European indices look the same, right? Some big runs, some bigger, down moves over the last few weeks. So is it, I'm asking this question a lot. Are we looking at big topping patterns, right? That are about to reverse, or just like really good buying opportunities that presents a much better risk reward compared to what they were doing 2 months ago, way up high. And I don't
Yeah.
think we know that the answer to that question yet. And that's why the next few months we're going to see some patterns develop that hopefully give us a better sense of what those look like.
Frank, you got this GDX chart. It's showing the RSI at 38.3, which appears to be about the lowest it's been for a year. Is that giving you any sign that potentially there could be a bounce here?
Yes, and exactly right, Trevor. Even though it is the lowest, it's very close to where it bottomed in November, right?
Mhm.
And again, last July, August. And so I think it's important, number one, it doesn't get oversold. It could, but the best case scenario that we see a bit come before that as it's testing support. Maybe you get some kind of bear trap, meaning that GDX pierces that support line, the support area near 93, 94. People freak out. And that's when the bid comes back in. That's why it's good to know these bearish patterns are there, but I'm always hesitant to jump on top of these when you're talking about a major uptrend in place, right? Because you can
Mhm.
zoom out. Like if we were to go back here, this is again amazing to think that this is trading in the 50s back then, or just in July or August, but this almost looked just as ominous because
Right.
it was just a sideways movement after a big run that looked like it was about to roll over, but it did not.
Yeah. Okay. I want to ask you, pull up the Bitcoin chart. We had Kevin Wadsworth of North Star Bad Charts on a couple weeks ago, and his TA on Bitcoin. I mean, I'm not a Bitcoin guy, so I wasn't scared shitless, Frank, but I could see why Bitcoiners would be scared shitless. And I'm just wondering if you have any sort of, you know, anything to fill back that if it's looking any better to you or not looking good. Let's hear your story with Bitcoin.
Sure. Well, one of the things, again, I'm always looking for are bullish patterns. And Bitcoin has not been able to leverage one clearly in a number of months, but it keeps on showing that it wants to, right? So people are getting
Mm,
pulled into this. Now, I have a chart showing what it's currently doing, trying to get through 75,000 after forming what looks like a potential cup and handle pattern. We can call it that. We can call it double bottom. This just is looking at the action from early February. So it's getting closer. And the interesting part is that it's been outperforming recently now. And if you look at it closely, it almost has been moving with software. Right? As you know, software
mhm.
stocks have gotten killed, and now it's trying to bounce a little bit more from the lows. And so I don't think anyone is confident in this, Trevor, because so many times it's been burned. Right? It's just consolidating for a bit. Saw the breakout in October failed, down leg. Then another really strong look like I was getting close to getting really bullish on this, but the breakout only happened for 2 or 3 days in early January. Next down leg. Now we're at it again. Right. And so what's going to change this? I don't know, but eventually we need to see one of these bullish patterns leveraged. Now, on the downside, I mean, on the bottom panel here is the RSI again. And so it's gotten up to overbought now twice. Again, in October and January, that again was not enough to pull this back because as we can tell, most of the time after it then fell out of bed, the RSI was only able to get back to the 50 zone, right? And that's obviously a characteristic of a downtrend. Now, I want to look at this in a slightly different way as well. This is a weekly chart. So for people who can't see, there's a lot on this chart, but I think it's pretty clear. So what this shows is it's a weekly log chart going back to the COVID lows here in 2020. And it has those same moving averages we talked about for silver, 13-week, 26, and 40, just showing how the trends have gone. And so what I found interesting about this is it pinpoints on here the absolute high for the 14-week RSI over the last few years and low twice. So, for instance, we know that Bitcoin topped in early 2020, or I guess in the first quarter of 2021, but its RSI hit a top in January 2021. So basically,
Hmm.
you missed a good amount of upside, but buying it there obviously wouldn't have been the right thing to do. So it just showed that maybe, things were changing, right? Again, a good amount of back and forth movement over the next year, but eventually everything fell apart. Brings us to June 2022. Again, not near the low, but that's where the RSI topped out. So we started to have or I should say bottomed out at 25. So we started to see positive divergence, right, with the Bitcoin itself making lower lows, but its RSI making higher lows. So eventually, again, a few months later, that's when we saw the bottom. So then we go all the way to March 2024. And this was interesting because about a month before Bitcoin halving, right, which is typically a bullish time, 12 months before and 12 months after, but it topped out right before that. Again, just from an RSI perspective, Bitcoin itself continued higher, but we started to see really strong negative divergence over the next few months. As again, this was making higher highs, but only marginally so. And it was very frustrating to
Hmm.
Bitcoin bulls, which thought this was just going to take off to 150,000, 200,000. Didn't happen. And of course, now pull our way back once more. And just a week or two ago, so far hit a bottom of 26. So this is not pinpointing anything. I just walked through the exercise to show that there could be some momentum signals under the surface that tells us the next time that a bullish pattern actually works out, if we continue to see the RSI start to rise on this weekly basis, that could tell us maybe the worst is over. And for long-term investors looking to maybe dip their toe in a bit, doing it after an RSI goes from almost 90 to 26 may not be the worst case scenario.
Hmm. Yeah, if the pucker factor isn't in the forefront of your trade, perhaps it's the wrong
Yeah.
trade. And that's exactly how that would feel if I were, I'd it's crazy, the fundamentals of like seeing things so overbought and the narrative being so scary. That's usually a really good time, sentiment driven, to be deploying capital. But frankly, I mean, here we are today, and you've seen a lot of sentiment signals. You follow all these charts. What is your gut telling you today and the overall general, scope of markets as we
Risky
sit here?
markets,
And
yeah, risky
yeah.
assets. I just like I like to look at things get from a pattern perspective, and I get my highest conviction when we're coming out of a high volatility period, not just from a bounce, but then you start to see foundations really take shape. A perfect
Yeah.
example of that, of course, was April of last year, but I wouldn't really say April. Things really changed in May. Now, again, I'm looking at this from the S&P 500 perspective because you went from a time when you had 1 or 2% moves, and that's a lot for the S&P almost every other day, more often than not. And so with that kind of environment, you can't trust anything. So when I started to see the first higher low in late April, and then the first breakout, first two big breakouts in May, that came with low volatility. That just you didn't see as many people chasing, right? The short
Hmm.
covering was over, and it started to feel that real capital was going in. It's going to take some time, I think, for that to happen again now. But I think that's why it's good to be patient, at least from that perspective, because I'm sure you've heard the term, Trevor. It's better to buy the best price than the lowest price, meaning that lowest price, what you see right now, looks like it is the low, but that could always go lower because it's like catching a falling knife. Or rather, see some sort of evidence that there is again an indication of a higher low over accumulation like that, and
Yeah.
then understand that this is a foundation that can be built. And I'm looking around, that's not really evident too many places. Now, it is evident in some of the some of the commodity charts, right? You can point to wheat, corn, some of those other areas, sugarcane even, right? So it's kind of like sneaky, like food or agricultural, um, inflation pressure there, but we have to recognize it.
Yeah.
And I think, the other side of the coin, technology has gotten hit kind of hard. No one's even looking at that though. So maybe the Mag 7 starts to form some sneaky bottoms as well. It's all, I think we're in flux right now because of that. Financials have gotten hit as well. So it's like everything that looked good now has a broken chart that needs to be corrected.
Mm-hmm. How about the dollar? Let's end on the dollar. The DXY. This thing hit triple digits on Friday, has since pulled back a little bit today on Monday, but it has been a complete wrecking ball.
Yes, 100%. And you can see what this looks like. It's rallied obviously strongly from, say, 95, 94, all the way up to 100. And so by doing that, if we look at all that price action going back to last May, this looks like just a one big potential basing formation or double bottom, which
Mm-hmm.
I don't have to tell you, anyone your listeners that realize that that's a bullish, potential in a major way if that actually happens. And so at the same time, because of that, it's produced the first, or just did produce the first overbought reading since November. And that's when the market rolled over. And before that, it was last August. So those times, right, hitting resistance while overbought ended up pushing the dollar lower. Question is this time any different with everything that's going on? And if that happens, again, wrecking ball for precious metals, uh, also for European indices, we saw that already, especially for the ETFs priced in US dollars, right? It can get hit especially hard. And with it happening, again, as the war is going on in front of the FOMC meeting, obviously a very important juncture for risky assets overall, including the dollar. Now, I don't have the chart here. We may have talked about it before, but there's a chart I look at going back a number of decades, which shows that this is just a tiny rally attempt on top of a long-term uptrend line, drawn from like 10 years ago. So it's trying to rally from it. Hasn't quite done so yet. But if you look back to the previous times, there were really steep uptrends two other times. And when uptrend lines, and when the dollar broke through both of those over the last 2 decades, that's when things really rolled over. So that's still out there. So I think, really how this deals with this resistance point is going to tell us a lot, not about just the dollar, but for risky assets overall.
Okay. And it's going to be an important chart to be paying attention to if you are at all managing your own portfolio or interested, where general markets going, specifically precious metals, because that correlation between the dollar and gold broke down a while ago. I mean, it was interesting. Remember when the dollar and gold were both going up at the same time? And Brent Johnston was like having a heyday in the milkshake there. Yeah, it was worked out. But then, I mean, obviously that correlation is broken down a little bit. But anyways, Frank, thanks so much for your time and walking us through these. We always appreciate you with bringing the visuals and sharing some of your thoughts. We'll have you back on here later this spring and see how things are playing out. And hopefully we get a little bit more clarification of where these markets are heading in shorter time. But with the Fed meeting this week, who knows? It could be more volatility here in the next 72 hours, but we'll see.
Yes, sir. Well, Trevor, pleasure to be here. Thanks a lot for having me. I truly appreciate it.
All right. Capp Thesis, everybody. Frank Cappelleri, well worth an entry. If you're interested to get his service, go check it out at capthesis.com. Frank, we'll talk to you again soon. Have a great week.
Thanks, Trevor. You too.